Hey guys, in today's podcast, we're going to talk about risk appetite. How much risk are you willing to take per trade, and why that may change as you evolve as a trader. Now, before we hop into this episode, make sure you subscribe to all of my YouTube channels, Akil Stokes Shorts, and the Trader Coffee Break, where me and Jason Greystone come on live once a week and discuss topics that are important to you as traders. So YouTube search Akil Stokes, subscribe, YouTube search Akil Stokes, #shorts, subscribe, and YouTube search the Trader Coffee Break. Let's dig in. Could be on my end. Give me a second. We are going to get into the trading today. I do have a question I want to shoot to you guys first, and it's a follow-up on something we talked about in Monday's Q&A. Monday's Q&A, we talked a lot about risk management, and we had a trader who wanted to grow his account pretty quickly, or not necessarily a negative way, but maximize his account, and we talked a little bit about the risk of doing so. And I put out a poll question yesterday asking, what do you personally risk per trade? I'd love for you guys to answer it as well. But I put out a poll question asking, what do you personally risk per trade? And there were four options. Option one was less than 1%. Option two was between 1 and 3%. Option three was between 3 and 5%. And then option four was more than 5%. Where would you say that you land in that category? And even if you're not trading, where do you think you'll end up landing in that category? What would you say? Ooh, yeah, looks like internet connection issues. That's the problem. Looks like I might not be able to see you, YouTube. Hopefully you can hear me. Or she says, or Bobby says 1% for me, or she says around 1%. Got a few more people typing in. Let me know. The poll's going to be up for the rest of the week. It's got about 150 votes, 200 votes already on different platforms, so it'll be pretty cool. Rudy says between 1 and 3. So here's what I found really interesting, right? So in both cases, the majority of the votes, almost 50% or over 50% in one, 40-something% in another, right, were between 1 and 3%, right? That's pretty standard, would you say? That's typically a pretty standard risk parameter. 3% is normally seen as like the extreme. 1% is a normal one. So that was the majority, which was cool. I was happy to see that. A poll on social media, maybe I got to give my followers a little bit more credit, but typically a poll on social media that's out there for the public, you expected something crazy. The category that came in second was less than 1%, which is cool, pretty risk averse. Now, here's what I found interesting, and I don't know if you guys can give me some insight on this. So third, actually, no, I would say, hold on, there are different results. I would say about third, maybe tied for second overall, but definitely somewhere between there. Different platforms had different results. Third was more than 5%. So on the Twitter poll, it was actually 26.9% had more than 5%, while only 10.4 had between 3 and 5. So it's kind of like it skipped over to 3 and 5%. But yeah, more than 5%, 27% on Twitter, and about 13% over on YouTube. So I found that to be pretty interesting, that people skipped straight from kind of the conservative between 1 and 3% and less than 1% all the way to more than 5%. You guys have any idea why that would be? I honestly don't. That's why I wanted to come in and ask you guys. But any idea why that would be? We skip straight over to 3 to 5 and go straight to 5%? Get rich quick. Yeah, that was extremely interesting to me. Now, I did get a comment, which was a pretty cool comment, underneath the YouTube version of the poll, I guess. Are you talking about per trade or total exposure? Per trade, Chris, per trade. Total exposure, that's fine, yeah. I'm talking about per trade. Per trade. Now, here's an interesting comment. And some people may take it the wrong way. I actually thought it was a very good comment. But Mark Quinn said, in swing trading, 5%, scalping, 10%. I've been trading 15 years, and I used to trade 1 to 3% risk, but I would always kick myself at the end of the year when I seen how much more I could have made with higher risk. So I finally increased it, but it's very important if you're going to take higher risk, you have to know your strategy and how it performs over the long haul. I'm talking 5+ years. Most traders have not been trading long enough to take risk over 3% per trade, but once you have been profitable for 5+ years, I advise you increase your risk. What are your thoughts on that? What are your thoughts on that comment? I think a lot of people are going to be scared, and there were a few comment responses to it. I think a lot of people are going to be scared when they. I wouldn't say it's normal, but I think a lot of people, just because most traders never make it 5 years, but I think a lot of people are going to be scared by initially hearing swing trading 5%, scalping 10%. And I'm more concentrated on the swing trading because scalping is what it is, if it's even a thing. It all depends on how we define scalping, but trader probably meant more like day trading, because that's a massive amount. 10% per trade, guys. You can do the math. How quickly can you blow your entire account risking 10% per trade? How quickly can you blow your entire account risking 5% per trade? Very, 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 very quickly. And that's why I would never recommend that to anybody. Because I think you're putting yourself, it's a recipe for disaster. But what makes this trader's statement different is that this trader's been trading for 15 years. They know their strategy. They know their results. They know their ebbs and flows. They know exactly what their max drawdowns have historically been. Now, it doesn't mean that, it's just like back testing. The past doesn't necessarily predict the future to a T, but it gives you a pretty good idea. So this trader knows exactly what they know, all the ins and outs of their system, and per the data that they've accumulated over those 15 years of trading, they can come to the conclusion that, hey, the reward is worth the risk, because you risk more, you get more reward. And they can come to the conclusion that says, hey, based on my data, based on my historical performance, I know that I can risk up to this much and not put myself at any great risk. You are at greater risk, but any significant risk of, say, blowing an account or taking a drawdown that is past my maximum allowable. And the cool thing about retail trading, because I trade it. I never trade it as I never traded for an institution, but I managed money, which is it's a similar technique. When managing money, you have to be very, very low risk, extremely low risk. Don't you dare put it at high risk, or you're gonna lose all your clients, all your accounts. The cool thing about being a retail trader with your own money is, guess what? It's your own money, right? Who's the one telling you how much to risk? Whose risk appetite are you dealing with? Your own. So you know how much you're willing to stomach. And we were talking to Duncan about this on Monday, the Q&A, about plugging things to the money management spreadsheet, where you're increasing your delta and stuff like that, and you can see like the massive returns. you also see kind of the massive drawdowns that come. And it's all about finding that mesh point where, hey, I am willing to accept this to make that. And then finding that level that isn't dictated by someone else, not dictated by, man, if I take more than a 10% drawdown, my client's going to drop me. It's about, what are you willing to stomach? Hey, may I have to go through a 10% drawdown at some point? But doing so is going to be able to make help me make an 80% return. And then you weigh those factors and see if it's worth it. So I think a lot of people are going to poo-poo this comment. I thought it was actually well written. It wasn't just like, hey, I risk 10% because I want to make more money. But it was explained. There was substance behind it. Douglas says, risk management to me is not risk avoidance. It's identifying risk you should be taking. Yeah, the risk you are comfortable taking. Yeah, it's all about identifying risk that you are comfortable taking. And that's going to be different per person. And that's the great thing about trading for yourself is that you are your own business. You create those rules. There are no set parameters saying that, hey, you can only risk this amount. Like, for you guys that have gone through the prop firm challenges, where you have to stay under this amount of risk. A lot of people that we've worked with that have gone through those challenges had to change their trading style because the risk that they want to take doesn't necessarily fit the rules of the challenge. The cool thing about trading your own money is, again, it's you make the rules. If you want to risk 20% on a trade, you can do it. You can do it. Jagger says, I wouldn't be comfortable with losing 5 trades in a row and blowing half my account. Yeah, but then again, Jagger, it goes back to maybe this trader system or strategy, whatever it is, maybe there's never a 5 trade losing streak. So that's why I say, and that's why he says, I think he said, he said, I wouldn't advise doing it until you've been consistently profitable for at least 5+ years. Because after 5+ years, I can tell you this from personal experience, you start to know your trading pretty well. I'm pretty accurate at predicting my return year to year. Now, I don't know when it's going to happen. I don't know when my hot streaks and cold streaks are going to come. That seems to be different every year. But I'm pretty accurate at predicting what my return will be each year. So once you've been trading for a while, you get pretty good at making these predictions. So again, if you've never been in a position where it's like, hey, and again, I'm not saying that I would do this, right? Again, I am in a different boat here. But if you've been trading for a while and you've never had a 5 trade losing streak, there's no reason to expect a 5 trade losing streak. Now you can still prepare for it. But if that's what your strategy does, if it's maybe a high hit rate strategy, a high win percentage strategy, maybe it never does that. So again, it depends on, we don't know the trader strategy. The trader doesn't know your strategy. It depends on what your numbers are saying. That's why the numbers are so important, because they won't lie to you. They won't lie to you. They won't lie to you. But I thought that was an interesting topic. I still don't know why it goes straight from 1 to 3 to more than 5%. No one likes 3 to 5. Maybe it's go big or go home type of mentality. Douglas says the key in risk management is the identifying part, because if you do not know what the risk is and how it will affect your business, then if you take the risk, you accept the outcome without knowing what it is. Yep. That's why the numbers are so important. That's why people need to back test before they trade, so they can have those numbers and they can have that data, right? And they can make informed decisions instead of guessing. And like Duncan said, if you know and accept, it makes the psychological part that much better. Like if you know and accept the fact that you may have to take a 10% drawdown At some point in your trading year, in order to get that 80% return, when that 10% drawdown comes, are you shocked? Are you caught off guard? No, right? This was part of the deal. But if you don't know that, if all of a sudden you don't know any of your numbers and then that 10% drawdown comes and now you're caught off guard, then it's going to trigger all these emotions. We talked yesterday about how emotions will kill you as a trader. Hope you guys enjoyed the episode. Remember, YouTube channels, subscribe to them, Akil Stokes Shorts, and the Trader Coffee Break. Hit that subscribe button, hit that notification bell. That way you don't miss the newest uploads or the newest live sessions on any of those channels. All right, I'll see you next time, guys. And remember, plan your trade your plan.